that the economy has held together as well as it has in the face of higher interest rates. I didn't think that the Fed would have the ability to tighten as fast as they did. My suspicion is that the pain will continue to be felt on a more delayed basis. I think the halting sales of things like consumer durables, but more importantly, single-family residential, and certainly the malaise that you're seeing in equity markets, means that there's more pain to come. But I'm frankly delighted that they've been able to get away with as many raises as they have, if only so that they, from their point of view, have some powder dry, the ability to loosen if they think they need to.
But how could things have been worse? I mean, we have the S&P that's basically melting. Like, what areas were you more concerned for?
Daniela, I lived through the decade of the 1970s. I lived through a period where the prime interest rate exceeded 15%, where the first mortgage rate exceeded 17%. And believe me, it can get worse than this. The pain coming out of the inflation of the 1970s, the Volcker-induced pain, while it was necessary, was severe. The misery index, as they called it in those days, which was the sum of the U.S. 10-year Treasury rate and the rate of inflation and unemployment, was spectacular. So as painful as this has been for some, it is only a down payment on the pain that we might have expected had they totally lost control. I realize that's a small measure of relief for people who are suffering pain this time.
Yeah. Well, to that point, that brings up what I want to bring up next, is a quote from Steve Forbes, who we both know well, who was speaking earlier this weekend, and he said, look, you don't have to make people poor to combat inflation. I just want to read the quote here. He says, today, unfortunately, not only is the Biden administration putting up obstacles to deal with supply side problems, but the Fed and other central banks think you have to depress the economy to bring inflation down. So basically disputing the idea that a recession is the only solution to combat inflation. They do it by artificially raising interest rates so they have fewer people employed. That is not the real cure. For him, he says the real cure is to stabilize the currency. You don't have to make people poor to conquer inflation. Do you agree with these tactics that he suggests, stabilizing the currency, Rick?
With the caveat, Daniela, that I'm not an economist. You could stabilize inflation other ways. You could have less government control. You could have less government expenditure. An awful lot of the inflation that we're experiencing was in fact caused by government. The way that the government created liquidity for an economy that they were crowding out by public borrowing was in fact artificially low interest rates. I don't believe that the current political situation in the United States would allow the Fed to reduce inflation by the way that Mr. Forbes suggests. I wish it were the case, but the truth is, if you were, I suspect, to poll Republicans and then poll Democrats as to whether they would see their favorite government programs, if they'd be willing to see their favorite government programs defunded in order to put the economy on a better footing, most would say no. So while what Mr. Forbes says is possible in the theoretical world, I think it's improbable in a world where voters continue to attempt to award themselves favors. You must either have fiscal controls or monetary controls.
Very well said. And to that point, I want to bring up the fact that the presidential election will be here quicker than we know. And we all know you can't win a presidential election under austerity measures and cost cutting, and people perhaps losing the social services they want. And you certainly cannot win an election with a recession or a plunging stock market. So how does this play out? How long are they going to raise rates?
I don't know the answer to that. And I suspect, like Warren Buffett says, the time spent trying to forecast markets with as many variables as there are is trying to know the unknowable. I think that what your listeners would be better advised doing is to get their own house in order fiscally. The idea that we're going to get the American house in order fiscally seems to be a non-starter. So my suspicion is that investors must acknowledge the fact that the political class doesn't have their interests at hand, and organize their own lives in a way that they can defend themselves as well as possible, given the circumstance that faces us.
All right. Fantastic. Let's break that down. And I want to bring up that one of our most popular conversations ever is when Rick Rule signaled that cash would be vital in the days of dramatic reckoning. Look at the strength of the... Yeah.
Last year, you'll recall in several interviews that we had, Daniela, that I said that while cash imposes immediate pain, in the sense that the deposit interest rates that you get paid guarantee you a loss after inflation, you have to have cash anyway. Because in a period of declining liquidity, particularly if we have a replay of 2008, the cash will give you the tools and perhaps the courage to take advantage of a situation rather than being taken advantage of. It is true that you are, after inflation, losing 4 or 5% of your purchasing power holding cash. But I have two observations. That negative interest rate that you suffer is really an option premium to allow you the liquidity to take advantage of the illiquidity of others. And as we have seen in 2022, losing 5% beats the hell out of losing 20% in other asset classes. So I continue to say that investors, despite the pain, must continue to be liquid. For me personally, Daniela, not for many of your listeners, but for me personally, that liquidity includes gold. I include it because I am willing to sell my gold, use it as liquidity, if a different asset class becomes more attractive to me. Many investors, if they bought gold at 1,800, are unwilling to sell it at 1,650, even if there is a more suitable opportunity on the horizon, because they don't want to quote, take a loss. For me personally, liquidity comes in many forms, principally U.S. dollar liquidity, but also liquidity by way of bullion.